Bloomberg Audio Studios. Podcasts, radio, news.
So here's the latest this morning. Investors looking ahead to key dates this month, starting with next Friday's payrolls report, followed by CPI and a Fed rate decision at the end of the month. Claudia Sahm of New Century Advisors noting the Fed's summary of economic projections isn't living up to promises, writing, tension has been building around the SEP at the Powell Fed. The Fed has long been data-driven in its decisions, but the complexities of the post-pandemic economy have led it seemingly to rely on data over forecasts. Powell even admitted as much at the press conference. Claudia joins us now for more. Claudia, welcome to the programme and a very happy new year to you. It's good to see you once again. How is this complicating decision-making on the FOMC?
Well, I think, a real theme of the last FOMC meeting was how much uncertainty there is about the outlook for 2025. And a lot of that comes from policy uncertainty, out of fiscal policy. But, the Fed has increasingly under Powell become very data-driven. And it's hard to believe it, but I think we're actually going to see a year where the data plays an even bigger role. And we already know that can create a lot of unnecessary volatility because it's hard to measure a $30 trillion economy in real time with a lot of accuracy. So I think we're going to continue to see this real overreaction. And we saw this yesterday with the initial claims for unemployment data, to just, these little scraps of data we get on how strong the labor market is, how hot inflation is, so buckle up.
Well, Claudia, this is a reason why people liken the moment that we're in to a dark room with a blindfold on, with lots of furniture going around and trying not to bump into anything because the data is messy. We keep talking about distortions, but forecasts have been wrong. And the whole concept of transitory is a huge scar over this Fed. So is there a forecast or an economic model that they should be following? And I'm asking you of the SOM Rule, who has come out and talked about how every rule has its exceptions and it's difficult to really come up with these.
Right. Yeah. This is the past 4.5 years have not been kind to rules or rules of thumb or how it's usually in the past. But we also can't become hamstrung by a mistake or a misjudgment that was made in 2021 about inflation. Right. We have moved forward and we've seen the economy slowly over time heal. We're seeing patterns that make a lot more sense than they did in the early days of the post-pandemic recovery. So the Fed, yes, and that's exactly how it feels. In a dark room, moving, we know there's furniture, but part of the Fed's job is to help turn the lights on and at least chart a path. And yes, that could mean redirecting, but to just, we do this next year, it's going to be all about the data points we get. That really sets up, I think, a lot of unnecessary volatility. Like the Fed is injecting volatility because it's saying, just follow those data points. And we know we get bounced around by them. So you need to have a grand plan in terms of how you're working your way through the year. It's tricky. Like the policy uncertainty is real for this year and for the Fed. So I'm not saying like I have an easy solution for them, but now is not the time to back away from some of the forward-looking, the heuristics that we have.
Mohamed El-Erian would agree with you. He's talked about this as much, the whole over data point dependence. What patterns are you observing that you think are going to be important and prescriptive for what's to come in the U.S. economy?
Right. So I keep all eyes on the labor market. I think that's such a linchpin to the resilient economy we've had and the ongoing recovery, in addition to, millions of Americans' lives really depend on their paychecks. And this is one where I worry that the Fed is somewhat complacent. I think they're being hypervigilant on inflation, as we know the Fed often is and should be. But their outlook that most of the officials laid out in the last summary of economic projections is a pretty optimistic one on the labor market, and basically saying, hey, we're back to normal. We're back in, I think Mary Daly even used the words kind of an equilibrium. We got one vacancy for one unemployed worker, and it's close to what the Fed thinks the long run unemployment rate is. And they project that to stay with us. Like, hey, we've got back to equilibrium. We've got back to a good place. We're going to stay there. And I think there's a lot of other dimensions you can look at the labor market, particularly the differences between the hiring and the firing. The hiring doesn't look so good. The firing looks really pretty great. Like that's not typical for a labor market, that's in balance, that's in equilibrium. And so I think there are some signs, and that's what we have to keep an eye on, are the places where it doesn't make sense. And another big piece is we've had a big push from the increase in labor supply from the immigration into this country, which has been extraordinarily high in recent years. And that's turning. or even if we don't have mass deportations, we're not going to have a big push from the outside immigration. And that's been an important dynamic of the labor market. We're going to watch it unwind. So I don't think things are as calm in the labor market as the Fed kind of in their latest projection seems to view it. And I mean, we're going to get our first taste of the data next week with the report.
Payroll's coming on January 10th. Just quickly, Claudia, how unusual would it be for unemployment to stabilize at these levels after coming off the lows to the extent that they have?
It would be very unusual to stabilize and hold in this place for like the next 3 years, which is essentially what the Fed is projecting. But that's saying that we're in a good place and we're going to stay there. But there is a sense that, barring a lot of this policy uncertainty this year, 2025 really could be, it still could be, but it was on path to be we get to the sustainable place. We work out some of the last disruptions. So we'll see.
I hope you're right. Claudia Sahm of New Century Advisors. Claudia, appreciate your time. Thank you. I think we all hope Claudia's right.